We are back with our panel investment analysts from Oasis Group Holdings, Michael Swingler, Isma-el Ebrahim and Fahad Shaikh, and we're continuing our discussion on infrastructure spending in South Africa. But Ismail, you know, we've been experiencing this load shedding and these challenges, but at the same time as well, we've had price increases which has impacted consumers.
Yes, Hassan. You know, if we look at the price increases, we've increased our prices on average over the last couple of years about 21%. So while we have had price increases, you must remember, I just said earlier, you know, Eskom is undergoing a capital investment program to expand our capacity. So those price increases are partly there in order to fund that capacity expansion. But apart from that, surprisingly, if we compare our prices after the price increases to our international peers, you'll see that we are still very competitive from our electricity cost perspective. So the price increases have had the impact that, you know, they've increased our industrial cost base, which has been, you know, it's kind of been a constraint on our industries, but we are still competitive relative to other nations. So when you have these capital expansion programs coming through, the benefits of that, you'll see actually we'll be able to increase our production, which will then enable us to actually kind of offset those price increases by lowering our unit costs. So from that point of view, it's obviously very positive.
Fahad, obviously now, based on Ismail said, you know, it seems that this pressure won't persist, you know, for forever. But what are we doing, or what is government doing in terms of making sure that these constraints don't continue in the future?
Okay, if you look at what the government is doing to tackle the electricity issue that Ismail just spoke about, firstly, in terms of investments, they've got a plan to double electricity production over the next 10 to 12 years. And there are a couple of different approaches or plans that the government has put in place to basically achieve that target. Firstly, you know, a lot of capacity which was previously mothballed or not, you know, in use currently, those plants have been brought back online. What that does is it does give you that short term, allows you to bridge the gap between supply and demand. Secondly, we've seen significant investments from a coal power generation perspective, and we know by 2015 and 16, the Medupi and the Kusile power plant comes online. So we'll start getting some relief as early as next year. And then 2016, further capacity comes online. The third approach is around the independent power producers. What we've seen is that the government continues to incentivize and push towards more independent power producers coming into the market. What that does is obviously from a public, and so basically the private sector can also play a role in terms of electricity generation for the country. And then lastly, I think a very important point is in terms of renewables. We've seen that renewables, 10 years ago, there was hardly any renewables in our system. At this point in time, roughly 3% of our production is coming from renewable energy, which includes things like solar or air energy. And the target is to take that from 3% to 10% over the next few years, and then eventually to almost 25% over the next 10 to 15 years. So I think the government does have policies and targets in place to basically bridge the gap between supply and demand. And then one factor which I believe is a relatively long-term plan, but recently you might have seen some news flow around shale gas in South Africa. We've seen how shale gas has completely changed the landscape in the US from an energy perspective. So over the long term, if South Africa does go ahead in terms of developing its shale gas reserves, that also helps from a power generation and energy point of view.
Sure. So there definitely seems to be obviously quite a bit of programs in place and projects that could obviously positively impact in terms of our energy. So Ismail, I mean, if you look at it, essentially speaking then, if we fix and sort out this power constraints, you know, over the next few years, we will probably be in a lot better position in future than what we were historically.
Definitely. You know, with the investment that's going on, and if, you know, as it's expected to be coming to an end within the next 2 years, as that comes to an end, you actually see some of these industries, employment rising, so there's job creation. But more importantly, this reintroduction of some of the capacity that we've historically lost, it now brings into account, it acts as a catalyst for the fact that, you know, we could boost our GDP growth back to the 5% level over the next 10 years, as is indicated in some of Eskom's plans. So if we can do that, it's usually positive. If we compare that to international, other international countries, you know, they're growing at around, they plan to grow at about 2 to 3%. for us to grow at 5%, if we bring this capacity online, it will be hugely beneficial. And then as Fahad indicated, we're in the top 10 in terms of shale gas reserves. If we can actually extract that, and that would eventually culminate in us being able to lower our energy prices, and from a competitiveness perspective, we'll actually be able to compete with some of the mighty industrial countries in the world.
Sure. Now, Michael, as Isma-el is saying, if obviously these energy projects go ahead, and are successfully executed as well, they obviously will help to unleash the broader economy and, increasing output in the broader economy. Are there other areas in the economy that needs to be invested in to make sure that there's no constraints on unleashing our full economic potential?
Yes, most definitely, Hassan. And the key areas there are rail and port. And Transnet is the key driver. So and the good news, again, as my colleagues have said, we already started that process 2 years ago. So we're in the second year now of a 7-year capital expenditure program of 300 billion rand by Transnet, and mainly going into rail and port infrastructure. We're currently running at about 30 billion rand on an annualized basis, but in 2016 to 2019, that will increase to about 50 billion rand per year, going into rail and port infrastructure. And what's quite interesting? Transnet is quite cash generative, and they will fund the majority of that capital expenditure from their internal cash flows.
Sure. For this, obviously, there's massive CapEx programs Michael mentioned. What are the major areas of focus for this CapEx program?
I think if you look at the key areas where this CapEx will go into, firstly, locomotives. Basically, it's rolling stock. So over the next few years, almost 1,300 new locomotives will join the Transnet fleet. So that gives you a lot more capacity. Similarly, from a wagons perspective, more than 13,000 new wagons will actually be inducted into the Transnet fleet. So that does increase the overall capacity of Transnet to move products across the country. Secondly, Michael talked about ports. So even at ports, things like pipeline capacity or pipeline capacity, things like trains, those are areas I think which Transnet is really focusing on.
Sure. So Michael, I think if you look at it then, if you take into account that, you've got this, we've talked about the spending on electricity, we're talking about now the spending on this, on the logistics by Transnet as well. How significantly will this benefit our country going forward?
For me, Hassan, the key is the competitiveness of South Africa and the ease of doing business and the efficiency of doing business. And what we have seen, as Isma-el indicated earlier, was many decades of underinvestment. We're now seeing the momentum of the investment that should, and I know it will, lead to the improvement in the efficiency of doing business, and that should lead to increased investment and the employment that we really need to address the social demands in the country. In addition to that, I think what's important about the infrastructure is the integration into Africa and the Southern African region. And then maybe just lastly for consumers, if we can take a significant amount of the road logistics and freight and move that onto the rail, for us as consumers, that will be very good news. It will reduce the congestion on the roads, and it will also reduce the maintenance cost on the roads in South Africa, which will be a win-win for all of us.
Sure. Well, I think to conclude, it seems obviously that if the infrastructure spending is executed effectively and timelessly, obviously the full true potential of our economy will be unleashed in the years to come. Gentlemen, I'd like to thank you once again for sharing your insights on the economy, and particularly speaking about areas such as infrastructure, which is obviously an important aspect and hopefully will drive our economy going forward. I'd like to thank Michael Swingler, Isma-el, Ebrahim and Fahad. Gentlemen, assalamu alaikum wa rahmatullahi wa barakatuh.
Wa alaikum
Wa alaikum assalam.